Hello everyone, my name is Liam, otherwise known as the Boss Hog, and today we're going to walk through my stock portfolio as of the end of June 2021, which stood at £70,191. Let's go. Okay, so my total portfolio profit now stands at 7,548, split between growth of 6.5 and dividend of just over 1,000. And although this month I made about £650, honestly, it didn't feel like it financially. I chose to move against the grain. I was picking up sort of financials, industrials, utilities, because they seemed cheap, effectively. And at least in June, that wasn't a particularly good use of my money. There were a few highlights. Probably the main one was for Cone, which is Cyrus One. Now this is a data center REIT I've owned for a little while. I think it was Morgan Stanley, but some analyst came out with a recommendation that Cone were most likely to be bought out and were a tasty little acquisition in that sector. And it basically caused the price to surge like 15%, and it went above my 12-month target, which is like $80. And for me, I thought it was like a good chance to sell because I mean, it took me a little while to even find out what had actually happened with the share. When I did, it just was so vague and completely unsubstantiated, and I just couldn't really see any reason for the move. So I sold out of almost all of my Cone position and just kept a couple back for monitoring, basically. And then I actually bought back half of my shares underneath 70 again, so kind of opportunistic swing trading as it turned out. So quite pleased with that. However, a lot of my larger holdings had pullbacks. I mean, most of them, though, I'd already done a lot of due diligence on and kind of viewed it as a buying opportunity. So there was that. In terms of my dividends, also, this is I've now got past £1,000 in total dividends, so that felt really good. Dividend month on month rose very slightly from 187 to 194, but I think just hitting the psychological £1,000 felt really great. However, what didn't feel so good is I fell behind both indexes for the first time since I began investing. Which is the 1st of December is my index comparison point. So like I say, I'm hoping that that's temporary, that I picked up some bargains this month and it's going to pick up, because obviously if I'm behind indexes, why not just ETF invest, right? And to me that's super boring, but I'm also rational enough to know, when I'm beat. But for now, however, I'm hoping it's just temporary and we're going to be catching up. So let's go into the breakdown of this a bit further. Alright, so in terms of my high level summary, you can kind of see on this graph here that my US profit actually went up last month. It's the green line there underneath. Basically, not only am I continuing, in my opinion, to make improvements to my US holdings. When I first started, I made a lot of mistakes with the US holdings. I either overbought or listened to too many YouTube videos, or just didn't really understand what I was buying into. Really, since March, I've been consistently improving, in my opinion, my American holdings. Also, as well, I've been deliberately introducing a skew into my portfolio that even though I want a 50-50 long-term split between US and UK, in my opinion, the dollar's going to strengthen for the medium to long term against the pound, and therefore I wanted to have more of a American skew in the short term so that I can basically ride the Forex movement as the dollar strengthened. That actually came really good this month and is accelerating actually in July, and I'm really confident on that strategy. As a result of those two things, my US profits rose 2.1k, which is awesome. However, my UK stocks were verging on a disaster. All but one went backward. The only one that didn't go backward was Fever Tree, which went up about £8 all in all. So almost all my UK shares went down, and some big ones as well. I think this is partly because maybe I was heavy in both mining and recovery stocks in the UK, and basically COVID, Delta variant, delay in the final easing of lockdown, and to be honest with you, probably a market overreaction, but still, it basically everything went backwards. Like with my largest holding, Hollywood Bowl, I'd been up sort of £650 profit. By the end of the month, I was basically back to zero. So it was just a fairly humbling experience with my UK stocks. The UK index itself didn't have a particularly great month. It basically traded sideways, but it did a hell of a lot better than I did last month. So I guess the net difference there between those two is my profit, effectively, of just a 650. So is what it is, basically. But let's go into both of those and the shares in a bit more detail next. All right, so here's my breakdown. And yeah, I mean, I think I've touched on it already. Really disappointed that I went backwards. Although my US stocks did go up, actually I did fall slightly further behind on the comparison. So last month I was at 9.6% return on investment versus 14.8. I went up to 11.9%, so that sounds pretty good until you realise that the S&P went up to 17.3. And just as a reminder, that's comparing from the 1st of December to current there, so my range is there just in the middle right table. However, on the good side, my FX impact is now pretty positive, to the tune of £432, and I basically have a break-even price of £1 to $1. $1.396. So basically, if the dollar is stronger than that point, then I make money. And yeah, considering last month I was minus 700, it feels really good basically. So again, this is part of my strategy. I'm only really going to be buying US stocks moving forward if I think it's basically a considerable bargain, but definitely now reintroducing my UK skew moving forward for probably the next year or so, to be honest. My worst performer continues to be GAN. It's fluctuated between minus 300 and minus 500. I continue to bag hold after their last quarterly update was encouraging. And again, for me, I'm just holding this until the next quarterly update, and hopefully there'll be some more encouraging news. We shall see. And lastly, in terms of my core portfolios stocks, so 11 of my 38 holdings are red. I decided to include GAN in this because I've held them for long enough. Now, previously I didn't class them as core. They're actually sitting outside of my ISA. But I decided I should bring it in just to kind of bring everything together. So we'll just whiz through these because we can spend a bit more time toward the end. But yeah, GAN minus 370. NEX is a UK stock, National Express. Now to me, this is arguably my most undervalued share at the moment. I've been buying super heavily into it. I think it's potentially up to 50% undervalued. I think it's being seen as a COVID stock in error. I think a lot of its revenues are guaranteed by states. They've been picking up tons of contract wins, and I just really like the underlying direction of the business. Hun is Huntsman Corporation. They're a US chemical company, highly technical, to be perfectly honest. I went onto their quarterly quarterly numbers just to kind of understand what the business was, and in a bit more detail how it was doing. Basically liked what I was hearing. I don't really understand the market reaction here either. Like, it had run up to like $33 following dividend increases and the like, and the only kind of semi-negative news I could see was that they're investing in kind of some high-end clean chemical thing that's good for EVs and that kind of stuff, but in fairness will take a long time to come online. It's like a 4-year investment, so similar to chip foundries, basically. Highly technical plant that takes years and billions of dollars to build. Okay, I can kind of get that's going to depress short-term earnings, but it's going to be great in the long term. And the other thing as well, they were mentioning about costs, inflation basically coming through, but they caveated that by saying that they were being very successful in passing those costs through to their customers. So again, I felt like both of those things were fine. And again, for me, I was happy actually buying these shares up to $28. I think they dipped below 25 at one stage, and I was buying between sort of 25 and 26, just building my stake. TEP is a UK telecoms company in the FTSE 250. I might have slightly overpaid for them to get going, but I wanted to build up a stake, and I continue to basically add one share a day. In my opinion here, the market hasn't quite understood yet the back-end system improvements that the company has done and is going through. I feel super confident with this as well because basically my day job is back-end phone systems, so I feel like I understand the business and the numbers super well. And again, I'm just basically building up a stake because it has fallen back sort of 10%, or just under 10%, and to me now it's actually verging on a bargain, whereas beforehand it was like, okay. Legal & General is a dividend stalwart in the UK as an insurance company. I think it's a very nice little company, and again, I don't fully understand the pullback, so I was just seeing it as a buying opportunity. It's got like a 7% or 6% yield as well, so that's great. RDW is a construction company. I've displayed this as minus 100, but it's kind of a bit misleading because I actually had this in my non-ISA shares, and where I do my spreadsheet, it's kind of pulling that together. I'm not sure if I should be including that or not, so I'm not actually really down £100 on my current holdings. It's like picking up historic stuff. But anyway, right now it's minus 100, so it is what it is. PHNX, there is a little known or fairly not well known UK insurance company called Phoenix. they had a large shareholder who basically sold 50% of their stake, just sort of reselling their business or refocusing their business. And the market had a bit of an overreaction. To me, I was just fine picking it up at that stage. It went from kind of being fairly valued to undervalued. And I think the company is a nice company, and again, a solid dividend as well moving forward. Genie there, this is Genius, previously a SPAC, but in my opinion, a perfectly viable company. They had a huge dip from $25 to I think 17 and a bit, off the back of a fairly large rights issue, share issue at $19 a share. I was kind of surprised they sold at $19, to be perfectly honest, although I did also think the $25 was maybe pushing it a little bit. Like, to me, this is a low 20 share. I think it should maybe be like 21 to 23. But the market also hugely overreacted, and it was like, I don't know. So I've actually also been picking up shares in this, again, just literally one share a day, just to bring my average down a little bit. I like what I'm seeing from this company. It's still fairly speculative investment, but they're moving into a legit company. TGP, I've only got a small stake in this. It's basically a shipping line that I'm going to sort of build up my stake over time. PRSM, this is a UK AI company. Again, I'm building my stake up super slowly over time, just one share a day, and it's only like an £8 share as well, so nothing too extravagant. And just kind of, again, a speculative company, still loss making. I have worked with them in a professional capacity in the past, and kind of like what they're doing, and so I thought I'd open a position. And FNF here, this is a financial, and I think most financials had a terrible month, including insurance companies. And to me, I just again, it's my smallest financial holding, but I'm just gradually building up, so I'm not bothered about that small loss at all. So actually more detail there on those companies than I was expecting, but as a kind of overview of those red items. And to me, interestingly, this is the first month since I started, so 7 months now, where I genuinely felt good about the dip. Like, it's all very well like saying, you want to buy on the dip and it's a great buying opportunity, but actually when you're dealing with very real money, and you're potentially like seeing big swings of like thousands, it doesn't really feel great. But this was the first time where I just felt super confident. Like, all the companies that had pullbacks and were large holdings I'd already done due diligence on. I kind of went on a couple of quarterly financials just to kind of make sure nothing had materially changed. And yeah, I mean, there's a couple of others as well that we'll get to toward the end that are still green, that for me were just beautiful buying opportunities. And I sort of was like, I was willing to spend 10%, 20% more on those shares, and now they're like a real bargain. So great, I'll just pick up more of them. So I don't quite know how it happened. Maybe it's because I just felt super comfortable and super informed about the shares I was buying into. And to me, I just, again, I just viewed it as a buying opportunity. So that felt good, like psychologically, to kind of get over that hurdle and arrive at it. Anyway, I think I've spoken enough about those. Let's move on. Alright, so next, basically my simplified beta that I nicked from PPC Ian. This is arbitrarily defining a risk level 1 to 5 on my shares. The plan here is to have 60 to 80% in group 3, and then 10 to 20% in 4+5 and 1+2. This month actually fairly little change, to be honest. I mean, level 3 is almost identical. I did move from 5 and 4 to 1 and 2. That wasn't super deliberate. Like, I'm not kind of super worried about a crash or anything like that. I just saw a couple of buying opportunities on utilities companies, and again, I've actually priced telecoms companies, and I'm kind of very comfortable with utility companies in terms of investments. So I just kind of saw a couple of opportunities, specifically TELUS and Vistra especially, I think is like crazy undervalued. So I just made a couple of big movements and kind of sold out of other positions. So that was part of that. My level 5 though mostly was the result of GAN and Genie both having pullbacks, or Genius to be clear. I think it's okay. They're both on the more speculative side, and we're just going to write some variance there. Level 4 is quite interesting. This is where I've got a lot of my recovery stocks, and it got pounded basically. I did get out of a couple of positions in level 4 that were kind of either recovery stocks that I kind of crystallized a win, or some underwhelming growth stocks I decided actually weren't really for me, or I didn't like them, or I just wanted to get out. Small losses like in the tens of pounds. But yeah, within level 4 I've got National Express, Telecom Plus, and Hollywood Bowl, and all of them had quite big falls for various reasons, so that's also pulled down my weighting in level 4. Level 3, no real change. Level 2, I've got the one company, which is the haulage company there, TGP. and level 1 materially rose. I've also got EPD here as well. They actually had a slight pullback. They had been up to like $26, $27, but still that's pretty green at the moment for me because I've got a $23 buy price. But yeah, VST I've actually got $16 buy price, so it's like $19 now I think. So it's doing super well, and to me like this is like a $23, $24 stock. So I'm just going to ride it out. So I'm going to keep buying shares until I'm at $17 and just build my position, because I think at $17 I'll enjoy a 50% return. And TELUS is slightly different. I'm actually following the TELUS share price super closely. Again, I just really like what I'm seeing both on their OSS side, so their network side, and their BSS side, so their system side. I just think it's super good. Everything is really good, and they've also got the sexy AI telehealth stuff as well. So again, I just really like what I'm seeing from TELUS, honestly, and decided I wanted to build a stake at not super cheap levels, but you know, fair levels, and that was enough for me. So I'm also building a stake there. Broadly speaking, very little movements. Super pleased with my safe assets. They're honestly all performing well, even after a small pullback by EPD. I'm still super psyched about that company. And for me, also as a Brit with an ISA, so our investment accounts, the fact it's an MLP is actually a bonus. I don't have to do any of the paperwork, and I also don't get any tax on the dividends. So normally on US stocks, I get a 15% tax, but for MLPs, I don't get a 15% tax. So the 7% here is very real, and will be very much enjoyable on quite a large holding that I have, 270 shares, I think. Also, though, to be fair, again, there was no panics this month at all. I'm super confident with all of my holdings in Group 4, and to me, I'm just hoping that they're going to recover. But even if they don't, I'm just going to keep on just dripping money into them because I really believe in them. And even Hollywood Bowl, I picked up an extra 100 shares when it dipped to like 225 pence, because to me, that's just a good buying opportunity. So I didn't actually plan to buy into more Hollywood Bowl. They're already like 9% of my portfolio. But I felt like that was just too good to turn down, and I'm really confident with the underlying business, so why not, right? And again, I've already done all the research into it, so I feel super comfortable about that. So yeah, happy with how this is looking, honestly. It's in line with expectations, and just a slight skew this month towards safer assets, just because it felt like there were some buying opportunities there, specifically Vistra. Alright, so let's have a look at my holdings by sector. Big additions in transportation. I definitely didn't originally plan to have 6% in transportation. Most of this is National Express. Almost all of it are like £100 in a shipping company. Most of it's National Express. I just think criminally underrated. Healthcare, I went shopping for Merck. I just felt like I was buying it at $73. I think that's a good place to buy, and I also got a special dividend as well as part of their split that they did. Financials is where I've really changed though. So I sold out of a few positions, which I'll highlight in a second, but basically HBAN, so this is Huntington Bank shares, so still green. And again, to me, Huntington had a weird wobble. They actually had a quarterly update. I think it was on the 16th of June, and I went on it, and you know, it was perfectly fine. I couldn't understand it. They've actually completed their acquisition, and you know, everything seems to be moving in the right direction. You know, this is now a fairly large bank, top 25 in America, and again, to my UK viewers, American banks are huge compared to UK banks, so you know, the top 25 is pretty large. So I'm really happy to buy HBAN at like, you know, $13. Brought my buy price down to like $14.09, I think it is. And to me, I calculated this at $17.20. I see no reason to change that, and to me, this is like a 20% undervalued opportunity. So great. Phoenix is fairly close to being fair valued, but following the dip, I felt like it was like 10%. And again, I wanted to build in there, and with a sort of 6-7% dividend, I only need 10% undervalued to be quite happy with that return. And Legal in general, probably fairly similar actually. It was probably fair value or not much underneath fair value. But to me, I think it's worth about $3.10 a share, and it's like been trading between like 280 and 300. But it had a bit of a dip down to 260, so I turned a fairly small position into a medium to large one. Now following that, utilities I've already touched on, and I think as well industrials, Huntsman there, I won't spend any more time on. Falls in technology, so I sold out my position in Kaki and AMD, almost all of my position in AMD. I sold most of my AMD at 91, so I did miss out on a few dollars of value there. To me though, I think AMD, like, I had a calculation at $95 a share. Now I do appreciate I'm on the lower end of many analyst estimates, but for me, AMD is in the same ISA as both National Express and Huntington Bank shares, as well as Phoenix and Elgin. Actually, they're all in the same holding, and TELUS. So it was a case of like I had thousands in Kaki and AMD. Both Kaki I was up like 25%. AMD I think it was actually quite similar. I bought in at $73, timed that really nicely, and I just felt like so Kaki I actually still like. I'm quite tempted to get back into, and AMD again I still like. I just felt like most of the upside was already there, and I trust my valuation. And you know, at the end of the day, even if I'm wrong, I have more confidence in the valuation of HBAN especially, and one or two of the and National Express as well. So that was the reason for that. I did add to Amazon underneath $3,200, so super happy with that buy price. My only sad thing here is I only got to 3/4 of a share. I wanted to get to one share, couldn't quite get there. And I did also add to Apple. I actually originally bought into Apple at like 117 and thought it was like an okay buy price. And over the last couple of months, primarily because of Joseph Colson, I've become more bullish on Apple. I think I've drunk the Apple Kool-Aid a little bit from an investment case. So I've also been adding to Apple REITs. We've already touched on Cyrus One and mining their Rio. This was just kind of a rejigging of my portfolio. I decided I wanted to different stakes. So Rio is kind of a bit of a generalist miner, although it's 2/3 iron ore. I have Evraz, which is 100% iron ore, and then I also want to buy into copper, probably Antofagasta, and I have started to build a stake, but I mean tiny at these volumes. I wanted kind of to differentiate and have like an iron and a copper miner. And if I'm honest with you, Rio keeps on hitting the news for terrible reasons, you know, like desecrating sites, kind of bringing out some skeletons at the moment. Like, I'm not proper into the ESG side of investing, but Rio just seems pretty shitty. And I just decided I didn't really like it. It didn't stop me enjoying sort of a 15% 1 month profit, so that feels pretty great. But I decided it was better to sell out of Rio for a couple of reasons there, so I'm fine with it. Yeah, so broadly speaking, I think my technology sector is a bit skinny. I'm happy with my consumer. I'm super happy with my financials. I've been meaning to build that slice for a little while. I just didn't really expect to sell down technology quite so much, but I'm fine in doing so because, again, really that's at the expense of utilities and transportation, where I have bigger stakes than I originally expected. So for me, I basically profit took and, you know, realized some of my gains. And then I've been buying up sort of healthcare and financials in companies I believe in and think are undervalued. So it isn't actually what I originally planned, but I feel like I seized on some good buying opportunities, so I'm fine with it as well. Okay, so on to dividends now. So, I mean, first of all, to hit £1,000, this feels proper like free money. I mentioned it to my wife; she can't believe it. You know, she's super surprised that you can make free money like this, and it's a great way of kind of getting her a bit excited about it as well. Reasonable number of dividends. My largest being Polymetal here. This is a gold and silver miner. I'm kind of using it slightly as a hedge, but I'm happy to buy more of it. So I'm buying Polymetal underneath 1600. Fever is like Monster basically for Americans, but it's like a soft drink that's designed to be mixed with alcoholic drinks. Very much a growth stock, very expensive even at 2500, but got huge potential basically. It's kind of crushed the incumbent in the UK, and it's launching into many new markets, so I'm optimistic about that. We've already touched on Merck there under $75, and also Everaz under 625. That's had quite a pullback. It was at 700, which I'd view as basically fair value. My buy price is currently like 570 as an average, and I kind of want 625 to give me sort of a comfortable 10%. I'm not fully comfortable yet pricing mining companies, but I have looked at their figures and reasonably happy with things. So I actually have a fair price here of 720 as a target price, but I don't fully trust myself with it. So I'm kind of giving myself a little bit of a margin, so more like, I think it's 680, and therefore with the 625 it gives me enough comfort. Also a heavy yielder as well as doing special divvy, so I'm hoping for that as well, so we shall see. In terms of the shares here on the right that I've sold out of, so I sold BAE, which is BAE Systems. I just preferred LMT, Lockheed Martin, but then you'll also see the Lockheeder on this as well, and I trimmed them when I was freeing up capital for AMD. And the same with Sage as well. Sage I actually used to have 400 shares in, and I sold all of them to fund AMD. Very happy with that movement. Sage I did actually have a bit of a run up, but again less than AMD did, so I kind of wasn't super sad there. I still made the right decision. Johnson & Johnson I still like, but I sold out of it. I can't remember what to buy. It was in my wife's ISA that I also manage, but again I think I'm fine with that as a movement. It might have been VST, but I'm not 100% on that. But anyway, I got out of Johnson & Johnson. I think it was fairly priced, but it's a very fine company. I'd happily buy back on any weakness effectively there. In terms of Microsoft, I mean, I just love Microsoft. It keeps winning, right? And I have a buy price of like 228. I was quite late to the party. I only started a little while ago. But I mean, it's a very fine company that keeps on winning. I love the direction that they're moving into. So my plan here is to basically buy in any dip, or if I'm going to kind of follow the share price minus 20%. So once I'm above the 20% threshold, not quite there yet, but quite close, then I'll start dripping in more shares. Is the plan. In terms of Mac, which is Macerich, they're a pretty decent shopping centre. Obviously, they've had a difficult year, but they actually still maintain their dividend just at a much reduced rate. I'm kind of really optimistic about this as a recovery. In general, I think shopping centres will survive, especially if they're basically in great locations with great tenants. I still feel like shopping centre is like an experience, right? You want to go out and enjoy it. So I feel like shopping centres, maybe there'll be fewer of them, but there'll be more like Vegas. There'll be like more of an all-day experience where you're going to really enjoy it. When I went to the Philippines many years ago, like that's kind of how I imagine shopping centres will be, where they're like places that you aspire to go and that you want to go. And I feel like Macerich is going to be a survivor effectively. They're smaller, much smaller than Simon Property Group, which is the main party in that world. I haven't added to my holding in ages, just because it is a recovery stock and it's not without risk. Once it becomes clearer, I would absolutely consider adding some, but for now I'm just going to enjoy the I think a 45% profit and counting. So I'm super happy just to hold this and let it ride, and hopefully the dividends will start being re-established as well. So again, pretty happy with really what I'm seeing here, and I'm hopeful that the dividends will obviously keep on increasing, which is the plan. Okay, so this is a super long video. These are all 38 of my holdings. I'm considering actually doing like a top 20 because I worked out the top 20 would be 85% of my portfolio by value. May well do that, but then I also wanted to display everything just for full disclosure. On the good side, I'm down to 38 shares. This is kind of approaching where I'd like to be, kind of below 40. It's few enough for me to follow. I did have 46, so significant movement. Again, I took the axe to several higher risk stocks and then some general tidying up where I had like one share left or etc. No swing trading this month. My main swing trading share is Broadcom, and I try and buy underneath 455 and sell above 475, and I kind of drip as I go past those points. It just didn't happen. I didn't have a buying opportunity for Broadcom, which is the share I swing trade in, unless I count Cone. So again, that was like accidental swing trading as it turned out. So I'll take whatever win I can get in a difficult month. Let's go over our large purchases that we haven't touched on. So Huntington Bank shares, 2.2k, significant holding now, my fourth largest share. It's still profitable, but only just. Again, for me, I can't believe I got to buy a significant number of shares in the $13. That is a total win for me. National Express, likewise, I kind of thought it was consolidating around 320, and then it dropped to like in the 260s. And again, to me, this is a share, although there's some uncertainty, I have a share price of between 320 and 390. I do appreciate that's a massive range, but to me, like they're basically at 75% of their pre-COVID levels already, and their earnings are at 115% of their pre-COVID levels. And the reason for the discrepancy is they've just become a better business. They've been winning contracts, they're more nimble, and again, a lot of their revenues are secured. So even though they might not have the cost, they're still getting the income, which is pretty sweet. So again, I think to me, like the more I read, and I did also attend their quarterly update as well, and again, loved everything I was hearing. And they recently bought another Spanish bus operator for I think 11 million. So they've clearly got the confidence to be spending 8 figures on a new venture in a country that they're reasonably new to as well. Not super new, but that's great. Huntsman we've touched on, Tellus we've touched on, Vistra I think we've already touched on, but just to kind of go into detail, Vistra, a little bit of detail. They obviously got battered by Texan Weather, but they're kind of the cost was 1/3 of their share price implied movement. So that I love the situation where there's a disconnect between reality and the share price. So even though it's not without risk, to me here the risk reward is just fantastic to be picking up, in my opinion, a 50% capital growth in a couple of years on a utility stock, plus a reasonable dividend as well. I fully expect to make 50% over the next couple of years on this stock. Super confident in it. We also had Amazon. I think everyone knows Amazon. Merck, everyone knows. Apple, no, we know. Elgen, again. Cone we had as well. That 1k is me buying back in. I did actually have a 2k holding, so I'm back up to about 50% of where I was. Phoenix, we've touched on. All right, so after Phoenix, that's everything else we have. Like I say, not the best month financially, but I was pretty zen about it. I guess I'm quite happy that we didn't break the win streak. We still haven't had a negative month, but there was definitely a lot of worry that this was going to be the first. But when I say worry, again, not really. I was kind of really pleased with myself that I finally arrived at the situation where I wasn't sweating big swings. I'm not even quite sure why. On reflection, like I say, I think it was the fact that what was falling I already was very comfortable with, very knowledgeable. I feel like I'm very knowledgeable, and didn't panic at all. And there were a few times though I could have panicked. There were big falls from Hollywood Bowl or Genius or a couple of others as well. And I was just like, there's nothing that's fundamentally changed about these businesses. And again, I just did a quick sanity check and decided that I just wanted to keep on adding, which is great. And again, the one opportunity that was really presented to me this month was Cone, and I really feel like I seized on it. Again, my exit was at like an average of $81, so maybe I lost out on a dollar, but sold pretty close to the top, and it then crashed back down to 69. And to me, buying Cone under 70 is a real deal. Again, I think it's worth like $80 a share. And it's quite rare even to find a 10% discount in the data center. I mean, in REITs in general. So I was pretty happy with that as well. So yeah, broadly speaking, a bit opportunistic, definitely went counter to the general market wisdom and did underperform as a result of that. So now, my plan is to basically deliver on the short-term underperformance and hope that in the medium to long-term, these buying good stocks, in my opinion, are undervalued comes good. So we'll see. I'm getting to the point in my investing life where I'm starting to feel confident and back myself. So that's all I can do at this stage, basically. So we'll see. Anyway, did way longer even for my long videos. Thank you very much for watching, everyone. I've been the Boss Hog, and good luck with your investing.